Morning Flash update for this Tuesday, the 23rd of August. Boy, time is flying. 2022, 8:30 a.m. Central Time. You know, I started thinking about the markets over the evening, and it dawns on me. I'm looking at this big break in the market, and what the market's obviously doing is it's pricing in Fed events. So, with the size break we're getting, it dawned on me this. The market's building in worst-case scenarios. Unless the Fed comes out super hawkish, the post-event could be a market rally. Could be a head fake, but a market rally. Will the Fed come out and be super dovish? They will, but they're not going to. I can't imagine the Fed Chair Powell's going to allude that he's going to do a 75 basis point hike in September. As they have said, and he has said specifically, they are data dependent, and the data they need are CPI and jobs numbers at a minimum. The other PMIs are all coming, but that's what he needs, and he gets them because the next FOMC meeting after this Jackson Hole event, obviously, is September 20th and 21st. That gives them plenty of time to look at events, see what the market's going to offer one way or the other. So, this big break, nice yesterday, certainly gives me confidence that a trade top is in of sorts, but where's the market going to be able to go with it becomes the big question. In the grain markets, I'm watching the pro-farmer tour, and I'm not liking what I'm seeing. The yields so far are smaller than expected, and those smaller yields are something you have to take into account. In a tight market like this is why you're getting the lift in the market. It's not about weather right now because you don't have weather to talk about. Are you aware that fall-type weather is hitting the East Coast, New Hampshire, Vermont? They're already seeing changes of colors, not because of season, lack of rain. But that's up there. We don't grow a lot of soybeans and corn to worry about there. It's here in the Midwest that we've got to worry, Minnesota, for the beans and things of that nature. Keep your eye on all this. I think it's very, very important. Dollar had a heck of a run to the 109 area. It could be ready to pull back a little bit. And I told you this in copper. You know, you look at certain events and you say, this is a no-brainer. In my mind, the one thing that China has to do is save their property market, regardless of everything else. They can't let that go. They've already seen rebellion. They don't deal well with that when you get hundreds of thousands of people not paying mortgages. I was surprised to hear numbers that were that big. But, do I know if they're accurate? You never know anything out of China. But I get it. If you're putting money down on a place that hasn't been built yet, the property value is falling, you signed a price for X, and now it's X minus some number, and you're paying on it, why am I doing that? Why not back away? So what the Chinese government has to do is throw money at that market. Yesterday, $29 billion for the property developers, then lowering mortgage rates anywhere from 15 to 5 basis points, depending on their 1 year, 5 year, what you're looking at, things to pay attention to. OPEC came out with a pretty broad statement yesterday. They are accusing the American market, the futures, of not really displaying where real cash markets are for oil. And the threat from the oil minister out of Saudi Arabia was very simple. We can cut production. Whoa. So now they're saying they're going to defend prices up here. Should you be surprised? Absolutely not. They don't want to drive them too high, but they will prevent them from going too low. So that's a sticky inflation point that you should pay very close attention to. They're more than aware of the worldwide recession that's happening, yet there's the veiled threat that we can cut the production. Bingo. All right, let's go to the day's news, if we could, and take a look and see what we have together. First, Red Book sales. I'm surprised. They're back up into the 12 to 13 point range. They were percent range. They were slipping. They had come down to 11s and 12s. They've climbed again. S&P Global Group's going to release the August manufacturing and service sector PMIs at 8:45, just a few minutes from now. And they're looking for that at around a 50 level in the service sector, 52.2 in manufacturing. The Richmond Fed's going to update their monthly manufacturing sector index at 9 o'clock. Last month's was flat. This will be an important number. New home sales, they expect them down 2.5% month to month at 0.575 million units. The prior months were down 8.1%. So they're saying it's not quite as bad, but remember, that's loss after loss after loss. Cumulative, it's a fairly big number. Eurozone, these are terrible. Anything under 50 is contraction. So you have that in the manufacturing sector, the composite, service sector up a little bit, but you would expect that. You know, it's still summer, that job sector is doing fine. You hear nothing about the fact that the Japanese yuan has dropped to the lowest level in 2 years against the US dollar. I think that's fairly important and something that we should all be looking at. You know, one of the things that you know that I do is I come out first thing in the morning and I start talking in the futures markets on my recorded videos. I try to get them and begin them around 5:20, 5:30 a.m. Central Time. I will give you what I'm seeing in Europe, Asia, the US, the reports that are coming up, and then we start looking at the chart action. Now, in the futures, we're going to look both at the weekly and the daily. I will mix it back and forth. I'm trying to give you long-term and short-term trading ideas, specific points of entry, exit. This is how the chart would look. You'll see how that works. And I do the same thing in the ETFs. So a lot of technical analysis, but with all that's going on, it's a heads up before the markets get going anywhere as to what you should be looking for in the openings, what's going on. Now, openings is a strange word in futures because it trades 23 hours a day, basically starting Sunday night and doesn't close till 4 p.m. Friday, only 1 hour each day. Does it really shut down in between? Now, there are different markets to do it a little longer, but that's the concept. I cover all of this for you in these manners. There'll be a slide bar as you can go from section to section, and I do the identical thing in the ETFs with individual stocks, and I'm rotating the stocks all the time. Like right now I'm covering NVIDIA. Last week was Freeport McMoran, but then AMC, Twitter, Tesla. I can go on and on. I'm covering them all for you, trying to get them going through that in a way that I think makes pretty good sense for you to work with through it. How do you get this information? How do you work with it? It's really simple. Just go to our website, iraepstein.com, go under the word research, everything's explained, you'll see everything you need to get yourself going right there. If that's a little difficult, just move your cursor up here, hit the top of the screen, you'll see an icon, give it a click, and away you go. I'm Ira Epstein. I couldn't think of a more important time than this, given all that's going on right now, and Friday, of course, with the Jackson Hole event. I'll be covering it in detail. You have a good